Don't buy stocks. It's boring. Everybody knows that. So if everybody knows it, that means it's probably true. But that's exactly what we're going to break down in today's video. Welcome back to Capital Compass. If you don't know me already, I help ambitious people build wealth through the power of small habits. And in this video, we are breaking down how I would invest my very first $1,000 if I was starting out completely fresh. Now, there's a lot of misinformation out there on investing, especially online. A lot of people will say, go invest in penny stocks, but you might lose 99% of your money. Other people will say, you need to be all in crypto or you're a loser. You'll also find other people saying, just put it in your savings account and draw interest. This is great because it's all of the above. So in today's video, I'm going to break down a very simple system for investing. So if you're ready to get the real map to financial success, you're in the right place. Let's navigate this together. All right, so first things first. Where would I even put my $1,000? Well, I would put it into a brokerage account. Now, a brokerage account is essentially just a bank account. But instead of holding cash, it holds investments. And this is super important. What do I mean by that? Well, when you put your money into a regular bank account, your money just sits there. At best, you might get 1% interest per year, but at worst, you're losing purchasing power to inflation. So in reality, you're actually losing money over time. With a brokerage account, you can invest your money. So instead of sitting in cash, it's invested in assets like stocks, ETFs, mutual funds, etc., which hopefully will grow in value over time. Number 2, with my $1,000, I would purchase a broad market index fund. Now, this is a type of investment that contains thousands of companies across many different industries. That way, I can diversify my risk because if one company fails, I'm not going to lose everything. In fact, I've made 2 separate videos about the benefits of index funds. So if you're curious about that, check those out. But long story short, index funds have historically returned around 10% annually since the 1920s. That's almost double the average savings account interest rate. Plus, they're very low maintenance. You basically set it and forget it. And that's my favorite type of investment. Number 3, I would invest $250 into dividend-paying stocks. Dividend stocks are companies that pay you a portion of their profits. Usually, these are more mature companies that have been around for a while. They tend to be boring and not the fastest growing, but they pay you dividends. So if I were to invest $250, I could make about 8 to 10 in dividends every quarter or about $40 per year. These dividends are usually paid out monthly or quarterly and are deposited directly into my brokerage account. Then I could take that dividend money and reinvest it or keep it for myself. Also, studies show that stocks with a history of paying dividends tend to outperform non-dividend stocks over the long term. Number 4, I would invest $250 into growth stocks. Growth stocks are companies that are rapidly growing. Now, these are typically younger, more innovative companies that are trying to change the world. Examples include companies like Tesla, Amazon, and Google. They didn't always pay dividends. In fact, some of them still don't. But buying shares in these companies early on allowed me to benefit from their growth. So even if I only had $1,000, I would try to find smaller companies that I think have potential to become big one day. So I would invest $250 into these types of growth stocks. Number 5, I would invest $250 into a Roth IRA. A Roth IRA is a type of retirement account. It's a special type of account that allows you to invest and grow your money tax-free. What does that mean? Well, in the US, you're taxed on your income, but when you invest, you typically have to pay taxes on any gains you make. However, with a Roth IRA, you don't owe any taxes on the money you invest or the gains you make. So investing in a Roth IRA is like getting a discount on taxes. Just make sure you follow the contribution limits and withdrawal rules. Otherwise, you may have to pay penalties. Number 6, I would invest $250 into a health and disability ETF. Health and disability ETFs are exchange-traded funds that focus on healthcare and disability-related businesses. These businesses provide essential goods and services that are needed no matter what happens in the economy. For example, pharmaceutical companies develop new medicines. Medical device companies create tools to help people stay healthy, and insurance companies protect people from financial disaster in case they get sick. These businesses are very important because everyone needs healthcare and disability coverage no matter what happens in the economy. Investing in these types of ETFs means that I'm investing in businesses that provide these essential goods and services. If something happens to me and I'm unable to work, then these ETFs will provide me with some financial support. I would choose ETFs because they allow me to spread my risk across many different businesses. This helps me to reduce the impact of any single business failing. I want my investments to be as safe as possible, so I would never invest all $1,000 in just one stock or one business. Instead, I would spread my investments across different sectors and different types of investments. This will help me to manage my risk and increase my chances of making money. And finally, number 7, I would keep $250 in cash. I would keep $250 in cash for unexpected expenses. Sometimes life throws curveballs, and you need money for car repairs, medical bills, or other emergencies. Having cash saved can help you deal with these situations without going into debt. So let's quickly recap. I would put my $1,000 into a brokerage account, and then I would invest it across 7 different areas: stocks, ETFs, mutual funds, growth stocks, dividend stocks, a Roth IRA, and cash. By doing this, I am diversifying my risk and increasing my chances of making money. Quick pause. If you feel like you're getting a clearer direction on your financial journey from this video, then join our community of fellow navigators. Hit the subscribe button to ensure you never miss your weekly guidance from Capital Compass. All right, so now you know how I would invest my first $1,000, but how does it compare to a traditional portfolio? Well, here's the thing. A traditional portfolio is fine. It's just not exciting. It's what most people do. They buy a bunch of safe investments like bonds, treasury bills, and index funds, and then they call it a day. But guess what? Those investments aren't bad. In fact, they're pretty good. Bonds, treasury bills, and index funds are solid investments. They're not the fastest growing, but they're pretty safe. But that's the problem. People want excitement. They want to hear about crazy returns and wild investments. But the truth is that the best investments are often the simplest ones. So my portfolio might look a little different. But the difference is in the details. Every single investment I choose, I analyze the leadership team, the company culture, and the competitive landscape. If I feel like a company's leaders are corrupt or the culture is toxic, I won't invest in it, even if it's a great financial investment. I also look at the competitive landscape. If a company has too many competitors, it's hard to stand out. But if it's the only one in its industry, it's likely to succeed. By the way, thank you so much for your support. I appreciate each and every one of you. All right, so if you're ready to start your own investing journey, here are 3 simple steps to get started. First, open a brokerage account. There are many options out there, but I recommend doing your research and finding one that fits your needs. Next, fund your account. Transfer money from your bank account to your brokerage account. Finally, start investing. Don't be afraid to start small. Even just $100 a month can make a big difference over time. Thank you for joining me on this journey. If you're ready to get the real map to financial success, you're in the right place. Remember, every great journey starts with a single step, and that step doesn't have to be huge. Even just $100 a month can make a big difference over time. So join our community and hit the subscribe button to ensure you never miss your weekly guidance from Capital Compass. I hope you enjoyed this video. If you did, please give it a thumbs up. Stay tuned for more helpful content. And remember, you can find me on social media. Have a great day, and until next time, happy investing.